Welcome back to Ben's Book Club. Today we are diving into the book, The Algebra of Wealth, A Simple Formula for Success. NYU Stern professor and entrepreneur Scott Galloway lays out a pretty brilliant blueprint in this one. It's absolutely a must-read if you're an ambitious young professional trying to build real, lasting wealth in today's wild economy.
In this explainer, we're going to unpack the core framework of the book. We'll challenge those status-based spending traps that constantly plague young professionals. And instead, we're going to introduce a really pragmatic, no-nonsense path to true autonomy. So let's think about what renting your identity actually looks like today. It's that constant pressure you feel when you're scrolling through Instagram or LinkedIn, right? It seems like literally everyone is broadcasting their success through a new luxury watch, some designer vacation, or a lease on a car they can barely afford. Well, Galloway offers this great mix of macroeconomic reality, some tough love, and behavioral psychology. And it's all designed to help you build a durable economic foundation instead of just, looking like you have one.
Okay, let's dive right into this by first redefining what wealth actually is. Galloway argues that true wealth isn't about that flashy lifestyle, the luxury car, or even just having a massive number sitting in a bank account. It's actually much simpler. It's the quiet, constant freedom of having your living expenses entirely covered by passive income. Think about economic anxiety as the financial equivalent of high blood pressure. It's this silent, constant stressor just waiting to turn a minor life mishap, like, say, an unexpected medical bill or a sudden layoff, into a total, complete crisis. True financial security, that means you have total optionality over your time. It means money stress isn't constantly shadowing your relationships, dictating your career moves, or worse, ruining your health.
So, to achieve this freedom, Galloway provides a literal mathematical framework. His formula goes like this: wealth equals focus plus stoicism multiplied by time multiplied by diversification. Over the course of this explainer, we are going to break down each of these four foundational variables: focus, stoicism, time, and diversification. We'll see exactly how they all interact to build true economic autonomy. Let's start by looking at the primary engine of your wealth.
Variable 1 is focus. Follow earning power, not passion.
Now, to get this right, we actually have to discard some pretty terrible conventional advice. We've all been told since we were kids to follow our passion, right? But the book explicitly argues that this is a complete myth, usually perpetuated by people who are already rich. Look, passion is great for your weekend hobbies, but for your career, Galloway urges young professionals to follow their talent instead. The strategy here is to find what you are uniquely good at that the market also highly values. Because the reality is, mastery, recognition, and the resulting financial reward, those things will eventually make you passionate about your work anyway. Plus, your individual talent has to be deployed in growing macroeconomic markets. You could be the absolute hardest working person in a dying industry and you're still going to lose. Positioning yourself in high-growth sectors allows you to ride those massive economic waves, rather than constantly swimming against the current.
And it doesn't stop at work. Your focus absolutely must extend to your personal life too. Galloway points out that partnering with the right person acts like a massive economic booster shot over time. And hey, this isn't just about the obvious benefit of dual incomes. It's really about shared values, long-term stability, and specifically, shared attitudes toward those tricky status-based spending traps. Think about it. If you're out there ruthlessly saving, but your partner is constantly upgrading their lifestyle just to impress their peers, all that compounding wealth gets completely destroyed. The data presented in the book actually notes that the net worth of married couples grows significantly larger than that of single people over time. So, your choice of a life partner is arguably the single most important financial decision you will ever make. No pressure, right?
Moving on to variable 2, stoicism, mastering your impulses.
This is really the emotional core of our explainer today, and, well, let's face it, it's often the hardest truth for high-earning young professionals to swallow. We live in a society where capitalism is literally engineered to monetize your lack of self-control. We're bombarded daily, right? Constant pressure to signal our status through these incredibly wealth-destroying spending habits. Just think about it. Upgrading to a luxury apartment just because you got a promotion. Or maybe financing a car way out of your price range simply to signal success to people you barely even know. These modern status traps, like lifestyle creep, luxury cars, high-end dining, designer goods, they are the exact things keeping high earners completely broke. The middle class has essentially been sold this consumerist lie that mistakes spending for actual living. So for young professionals, resisting this intense social pressure isn't just a good idea, it is absolutely critical.
It all boils down to this one absolutely crucial point. You aren't rich because of what you make, you're rich because of what you keep. The goal of Stoicism in this context is just ruthless discipline. It's all about practicing temperance and fighting off that urge to let your lifestyle creep up every single time you get a raise or a bonus. By minimizing your recurring costs and just totally ignoring the temptation to inflate your lifestyle, you can successfully convert your regular, everyday income into serious long-term investing capital. This emotional mastery, that is the definitive line separating those who simply earn a high salary from those who actually build lasting generational wealth.
All right, let's look at variable 3, time, the compounding engine.
Galloway bluntly calls time the ultimate currency and the fire in which we burn. Powerful, right? It brilliantly illustrates the totally devastating cost of waiting to invest. Even a tiny delay, just 2 or 3 years in your 20s or 30s, can literally cost you hundreds of thousands of dollars over your lifetime. Let's frame this around those status traps we just talked about. The opportunity cost of buying a luxury car in your 20s isn't just that 50 grand you dropped on it. It's the hundreds of thousands of dollars in compounding interest that money would have generated by the time you actually retire. And you know, compounding isn't just financial either. The most important returns in life actually come from the compounded effects of our long-term investments in our relationships, our health, and our skills. Small, consistent actions over decades are always going to crush those get-rich-quick schemes.
Which brings us to a simple but incredibly powerful realization from the book. Today is the youngest you will ever be. Since time in the market will absolutely always beat timing the market, the very best moment to start applying this formula is right now. The margin definitely exists in most young professionals' lives to start earlier than they think they can. So how do you take action right this second? Well, set up an automated transfer to a brokerage account on payday. Make it so you don't even see the money hit your checking account. You literally cannot replace lost time, so setting up these automated systems today makes it practically impossible for you to interfere with your own wealth building over the long haul.
Finally, we have variable 4, diversification, broad and boring asset protection. Think of this as the protective Kevlar for everything you've worked so incredibly hard to build. We have got to aggressively draw a line between true investing and the mere illusion of investing. The data shows that only a tiny fraction of active retail traders ever actually make a profit. Galloway is super critical of the hype cycles we see surrounding things like crypto, meme stocks, and day trading apps. He essentially frames them as a giant wealth transfer from the young and hopeful straight to the people who are already rich. Let's be real. If you're treating your finance apps like a casino on your phone, you aren't investing. You're just gambling. True investing relies on utilizing low-cost, broadly diversified index funds and ETFs to steadily, safely grow your capital. So, how exactly do you build this robust defense? Well, while your career focus should be hyper-concentrated, finding your specific talent and totally dominating that space, your investment portfolio should be the exact opposite. It should be extremely broad, completely boring, and designed purely to survive long enough to compound. A heavily diversified portfolio spreads your risk out across domestic and international markets, bonds, and cash alternatives. Look, the point of diversification is not to maximize your short-term returns or to stumble upon some lucky breakthrough stock. It is entirely about protecting your wealth by drastically reducing your dependence on any single asset class or any one individual company.
This all leads us to the end game, reaching your freedom number.
When you combine that disciplined career focus, your emotional stoicism, the absolute compounding magic of time, and some boring diversification, you finally reach your freedom number. Galloway defines this as 25 times your annual burn rate. This is the exact literal threshold where money stops being a daily stressor and transforms into pure optionality. And the math? It's beautifully simple. If your annual living expenses are, say, $100,000, your freedom number is $2.5 million. Once your diversified assets can reliably generate enough passive income to cover that burn rate indefinitely, well, you win the game. Money is no longer the main story of your life. Instead, it simply becomes the ink you use to write your own chapters, completely on your own terms.
So the next time you're tempted to buy some shiny status symbol just to impress people you barely even know, ask yourself, are you mistaking your spending for actual living? Take a really hard look at your daily choices. Audit your habits to ensure you are building true economic autonomy, rather than just financing some expensive illusion dictated by social media. Wealth is built through disciplined choices repeated over years and years, not a lucky break or one flashy paycheck. Take control of your focus, master those impulses, respect time, and diversify your risks. Apply this formula and subscribe so you don't miss an episode.